Good afternoon, guys. It's Working, bringing you a quick update on EOS. Hope you guys are having a wonderful afternoon. And just real quick, guys, before I get started on the analysis, I want to thank everybody that's been sending comments and saying positive things about the about my analysis, guys. That does feel good. I apologize, I haven't been able to respond to everybody, but I do read your comments, and it is certainly appreciated, guys. And just glad to know that it is helping some people out. So again, guys, I wanted to just make it clear that just because I don't respond to you doesn't mean I haven't read your comments, and I do appreciate them. So anyway, guys, moving on, we're looking at EOS to the dollar 4-hour chart on Bitfinex, guys. And last time we spoke, I believe last time we spoke, EOS was sitting somewhere up in here at about 543, somewhere thereabouts. I said to watch out for a possible double bottom at this 530 range, if I remember correctly, guys. I said if we crash through that, we're very likely going to come down, test the bottom of this zone at 510. I said the low was going to be a critical low was going to be that $5 range, guys. That's obviously a good psychological support. If price does break below that $5 range, guys, I said there's a very high probability that it's going to drop down to the $4 support zone. There's not a lot of support between this $4 and $5, guys. Price has come down. It did wick down here to about 4.83. Somewhere around there, depending on the exchange that you use, guys, and then quickly was rejected and moved sideways. And if we look here at the daily, we can see that on the daily chart, clearly we haven't had any close. We had a close that went just about 5 cents below that at about 4.96, and then immediately, as soon as the candle opened back up, was right above that. So, is that a decisive break? Well, here's the thing, guys. It's kind of a psychological break. Yes, technically, that was a breach of that $5 range, but the market makers know that. Market makers know that a lot of people have their stops sitting right there at that $5, knowing it's 510 support, stop down at $5, and so what did they do? They ran the price down below that $5 to make sure they got everybody, stopped everybody out, and then ran the price right back up. Two things going on there, guys. Just to give you some market psychology here, they ran the price down, so anybody that went long, they were trying to stop out because they knew their stops were right below that $5 range, so they wicked right below there. Then anybody that was going short, what did they do? Because they also know as soon as you break that $5, a lot of people are going to enter short positions, think it's going to crash down to 4, knowing there's not a lot of support. So what did they do? They brought price right back up to 531, knowing that their stops are probably sitting around 510. From $5, somewhere thereabouts, guys. Anywhere above 5, say, brought it all the way up to 531, guys, just above that the prior what was support would act as resistance, knowing they'd stop some people out. So they're trying to stop hunt in both directions, guys. And it's resulted in this wedge. We can see a clear series of lower highs, higher lows, and we're reaching the apex of that wedge, guys. And I'm expecting a breakout probably within the next 8 hours or so in one direction or another. Now, is it going to be a major breakout? I don't think so. As it looks of right now, if we come here, we look at our moving averages. This is again on the 4-hour. We can see that our moving averages our exponential moving averages and our moving averages are not really converging on top of each other. We do have the Bollinger Band starting to bottleneck a little bit, but not nearly as much. This is the kind of thing I like to see before we're going to see a major breakout. Right back here, as I pointed out many times, where you've got the moving averages, exponential moving averages converging on each other. You've got the Bollinger Bands that are bottlenecking. I mean, anytime you see this, it's going to break out. It's almost a virtual, as close to a guarantee as you can get into this market. There are no guarantees, but that is a tall tale sign, guys. That is a very, very good sign that's going to break out. We're not quite seeing that yet. If we zoom in here to the hourly, we're seeing it a little bit more. We're starting to see, you can see here the EMAs and MAs are starting to converge together here on the hourly. We can see that the Bollinger Bands are starting to bottleneck a little bit more. So that tells me that yes, we're probably going to see a move, but it may not be as major as we have in the past because we're only seeing it on the hourly and not on the higher time frames. However, that doesn't mean that it can't happen. So if price does break in the up direction, guys, this is obviously we're going to be watching the top of what was support is now acting as resistance. So the top of this 560, there's a clear order block that's sitting right up in there. We can see it right here. Very, very clear order block sitting right here between about 560 and 547, somewhere thereabouts, guys. Wouldn't be surprised to see price come up, quick bull trap everybody high, and then immediately crash right back down. If we do break above this zone, guys, then we're going to get into this. There's still a lot of resistance even above this. If we do break above that little block, we can see that there's been a lot of resistance. That if I just zoom in here, a lot of resistance. Price was kind of curling around this resistance line here at about 5.67, somewhere there thereabouts. So price has got a long ways to go. Ultimately, it's going to have to break above this entire structure, which is the high here of about 5.94. If we can break above 5.94, excuse me, guys. Break above. Actually, there's a little microstructure here sitting right in here. So yeah, call it the top of this zone at about 5.95, somewhere thereabouts, guys. Then if we can break above that 5.95, clearly it's going to be a very, very quick rise, more than likely up to at least 660, probably more like 675, 680, somewhere thereabouts. But we've got a long way to go, a lot of resistance to get through until we get to that point, and we are seeing a lot of structure to the downside, guys. Unfortunately, as much as I hate to say that, we had to, if we look at our look at this microstructure, we go swing high, swing low. We can see that price came up, wicked into the 382. Wasn't able to hit the wasn't able to hit the 50 at all, which is a sign of a very bearish market. Not much strength at all as of yet. Doesn't mean it's over with, guys. Just mean as of yet we're not seeing any sign of a reversal. We're not seeing any sign that the bulls are taking control. We're just seeing a lot of bearish momentum. And is price going to drop down to $4? It certainly could. If we come out here, I'm going to zoom out here and give you my bigger picture Elliott count. This is on the daily chart, guys. Clearly we had 5 waves up when we went to our all-time high of 23.15, somewhere thereabouts, depending on your exchange. And I know a lot of people are trying to count this entire structure as a one big A, B, C. And yeah, well, that's still technical. I think there's a much better count in there, considering that we have such a deep correction. We're now even below the 8865 fib. In fact, if I go swing low, swing high, just to give you an idea of how deep we are retracing. Well, let me get up the top there, right on this thing there. Swing low, swing high, guys. We went well below the 8865 fib level, guys, which is just that it just doesn't do that on an ABC correction unless it's going to fail. So more than likely, with this very deep correction, and we see right in the middle of this correction, we have two very clear, in my opinion. If you go to the 4-hour, you can see two very clear ABC patterns, A, B, C. This is the only impulsive-looking move since our all-time high. This right here between let's see, on about May 23rd all the way up to June 2nd. This is the only impulsive looking move, guys. Coincidentally enough, that would be a perfect area for an impulse, because it had a perfect ending to our ABC. It obviously failed the prior low as soon as it dropped below 1020, the prior low of this structure. That's a failed wave. So I'm counting that as an X wave. So I believe we're on a WXY pattern. So we started another ABC pattern down. If that is correct, we can see, if I zoom in here, guys, we've got a very clear, if we look at our subwaves, try to back up this count, we've got a very clear 1, 2, 3, 4, 5 for our A wave. For our B wave, it's very, very clear that there are only three subwaves within our B wave, A, B, and C. As you can see, and now we're working on 5 subwaves down to complete the C wave. And do we have our 5? Yes, we do have our 5 subwaves already. I can count 1, 2, 3, 4, and 5 waves down. The 3 is not going to be the longest, but it's also not the shortest, so that's still very, very technical. So if we zoom in here and try to pick apart that last 5th wave, that last subwave, again, assuming that this is a correct count, try to pick apart this last subwave, guys. What do we have here? Well, we have a very clear 1, 2, excuse me, guys, 3, 4, and now we're coming back down for the 5. Right. So have we seen the bottom of this 5th wave? It's certainly possible. It's certainly possible, and we will find out soon enough. But we also can make we know that the 5th wave is very oftentimes as a one-to-one extension. So if we just pull our Fibonacci extension, and we go from the bottom of our subwave 3 to the top of our subwave 3 to the bottom of our subwave 4, and we come down, guys, what do we have if we want a one-to-one extension? Well, it almost perfectly hits it's at $4 and 4.02, so almost perfectly a $4 hit. And what do we have back here, guys? Well, if we, as I've showed you guys many times, where does that support start? Right at $4. So is that a coincidence that we have a perfect Elliott count that would bring us down to exactly $4 for a one-to-one extension of that wave 5? Yeah, I don't know. And the truth is, the market makers know this as well. So yes, technical analysis tells me that there's a very high probability that we are going to break to the downside, guys. And obviously, this is going to be dependent on Bitcoin. As much as we don't like it, EOS is still tied to Bitcoin, as are most of the altcoins. So if Bitcoin drops, EOS is going to drop. If Bitcoin rises, EOS is going to rise. But assuming that Bitcoin is out of the picture, and I'm just looking pure technical analysis, let's say Bitcoin just sits sideways, I think there's a very high probability that EOS is going to drop. And I say that just based on our Elliott count, based on seeing no real volume in the market, and seeing no real signs of reversal. So again, doesn't mean it's going to happen, guys. Just means we got to be very, very careful, knowing that that $4 is a real possibility. We come in here and we look at our RSI. Again, this is on the 4-hour. We zoom it up. We can see that there is some hidden bearish divergence from this point to this point clearly on price. That's a lower high. If we come in here to the exact same points, excuse me, from this point to this point, that's obviously a lower point. If we use the same points, create a higher point, since this is a downtrend, that would be hidden bearish divergence on the stock, hidden bearish divergence on the MACD as well. However, it's not blatant. It's a very, very slight hidden bearish divergence, which means even if it does break down, it looks like it might be setting up for a possible bear trap where price breaks down, double bottoms at that 4.82 and then rises right back up. That's a real possibility. If it does make a lower low here, if we do break below that 4.82 low of this microstructure here, then again, guys, I think there's a very high probability we're going down to 4. Now, the one saving grace is there's a tiny amount of support sitting at 4.57. And I do mean tiny. If we come back in here, when I zoom it up, guys, we can just see that price kind of came in here on the 4-hour, moved sideways, and then the same thing on the way back up. So it acted as support and resistance just very, very slightly in the past, so it may do that again. That's really, if price does break down, that would really be the only hope to catch it from a technical point of view. Now, if you look at this from a market maker's point of view, they all know everything I said. They know that everybody is expecting this to go lower. And if I pull out my short positions, or excuse me, if I pull out the longs and the shorts, we can see longs are just kind of sitting sideways, haven't really done liquidated much, and a lot of people are staying in their long positions, having dollar cost averaged in more than likely. And if it goes low, yes, sure, they would if it goes higher, excuse me, that would go against what market makers would like to do for these longs. However, if we come in here, shorts are stacking at just an insane rate, and they're continuing to stack. So retail investors are expecting this to go much, much, much lower, which tells me that the market makers have a lot of incentive to bring the market higher. They want to liquidate these shorts more than, because there's a lot more. They want to liquidate, it's stacking at a much greater rate than longs. So they're more than likely going to want to liquidate these shorts at some point, and at some point they're going to have to. At some point, these shorts are going to get either liquidated or people are going to end up taking their profits. Either way, it's going to cause a boost in price. So, is that going to happen in the short term and they fake everybody out, go on another stop hunt just to bring it right back down? Certainly is possible. From an Elliott perspective, if price does rise back up, guys, as I told you, we're going to be watching this zone. Obviously, the prior high, possible double top here, sitting at 5.34. Double top off that and then comes right back down. If that does break, it's going to be a quick rise up to the top of this zone at 5.60 in my opinion, and then there's a lot of resistance between 5.60 and this high of 5.95 to get through before it's going to be a clear blue sky to have any major hike. And I believe once it gets above that call it $6, good psychological. Once we get above $6, it's going to be a very quick rise up to this zone of 6.90 in my opinion. At least 6.60, but more than likely 6.90 in my opinion. So these are my quick thoughts on EOS, guys. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, I certainly do appreciate an upvote or a re-steam or a like, depending on where you're viewing this on. And until next time, guys, please trade safe. This is Working, signing out.